I'll just start with Bitcoin here. Seems like a nice place to start. So like last week, during my live, we were looking at Bitcoin coming down to the 22.3 region from our big bearish divergence on the higher time frames, so on the daily, the weekly, etc. We're forming big decreasing, basically lower highs on the RSI, while price was making slightly higher highs. In other words, big bearish divergence, right? This usually shows signs of topping out, slowing momentum. From that, we got an initial move down, along with a little bit of sideways and up action, which, if you zoom in a little bit, usually ends up being in a bit of a wedge or channel, however you want to draw it. These usually play out to the downside, so essentially when you see a big dump, get sideways and up, you're more likely to come down. We saw that play out basically. And then for the past few days, we've had really no movement, but we reached our 22.3 target from the last live, and then basically did nothing from there. Traded sideways, and now in the last few hours, we are starting to move down. I haven't really done much trading in this time because there wasn't really any movement to trade. But yeah, we are starting to see some things happening again. I am looking for this to continue a little bit lower here, but I would have honestly liked to see this make a try back up before coming down for, I guess, healthier price action. Right now, the way this is set up is we're losing this trend line. We're falling below our kind of minor support we had here. And I'd be looking for this to essentially take out these lows for liquidity. So essentially we got some open wicks here. People who are in longs from longer periods are probably looking for have their stop losses below here. And aggressive shorts might step in once we take that low. So I would imagine this to trade down over the next maybe a few days, take out that low. This would be, I'm not particularly keen on taking a bet on that, so I wouldn't specifically open a short right now just to look for a sweep of that low. What I might do is if I get a different entry, so say we just broke this low here, we've got a bit of a support line, we get a little retest in this area, and I get some conviction on a short there, I might just essentially play a scalp, right? I'd be looking for this to essentially short around there and take very minor targets, but then just hold a part of that position. So rather than taking profit and closing the entire position, I would be holding a little bit from all the way up there, just a small part of that position, to run to these lows for another target, right? So that would just be another, I guess, profit target on a short, but I wouldn't particularly enter shorts just to reach that target, if that makes sense.
Do you think the Mt. Gox liquidation will impact the price?
Yeah, so basically,
I think it's on 10th or 11th, I think.
Yeah, so Mt. Gox, Shanghai update, I think these are very good excuses, is what I always call them, for market price action, right? So this dump we had here, if we're just looking at this from a chart perspective, right, we had big bearish divergence on higher time frames. We made a lower low and then traded sideways and up, usually more likely to trade down, right? And then we got a big dump candle. And then I don't go on social media for crypto too much because I don't find it helps too much. But yeah, people were calling this like I think it was Silvergate Bank or something. One of the crypto banks had some problems. They were attributing this dump to them going under, right? When the chart already could have told you this dump was going to come, right? So that's why I call them excuses, because we already know that Mt. Gox and the Shanghai update are coming. So if it's going to dump, a quote-unquote dump because of that, right? That's a great excuse for the market. Like, people will have a reason for the dump, when in reality, you have very basic market structure here where you're overextended on higher time frames. You're coming down. You make a lower low, a lower high, a lower low. Didn't really make much of a bounce, but we could still kind of call that a lower high. And now you're breaking support again, right? You're just stair stepping your way down. And what we'll likely see is a continued move down here. Maybe a subdued bounce somewhere. But all in all, I am looking for this, just purely ignoring basically everything, and just looking at this from a very basic chart perspective, right? We have this a trend line of support, but we're kind of already falling below here. We're just likely to trade back down to 21.5. And if we lose 21.5, I mean, if we even get to 21.5, right? This is just kind of a double top bearish divergence. If you're just making a lower low here on like a daily time frame, then you're kind of reaching downtrend levels. So you're looking for like a lower low at that point, and then you lose 21.5, and you come to, well, you just look for like the middle of the range, middle of your previous trading range. So we got kind of here like, let me go on a clean chart. So like basically the wick lows here lines up with those highs. That's kind of a middle of the range here. So you lose 21.5, you go to 20,004. And I honestly expect this to come down further if we lose 21.5. I don't think a massive double top like this is going to just drop to there and then hold. Anything can happen, right? We can only play probabilities. Yeah, I'd mostly just be looking for a move back down to high 18,000s, right? Because we got basically all these lows here forming a support, right? And that would be a great place to put in a higher low on the macro time frame, right? If I'm to pull a fib from our like rally start to our rally highs, basically, 618 is like my golden pocket is essentially 19,000, right? So that's very much in line with these lows. If I pull it to the actual low, still same area, right? Friend of mine really likes the 705, right? It's all this basically just a big box here where you've got kind of a big support, and that lines up where we're at. So that makes just a lot of sense, right? So that's kind of where I'm targeting if we do lose this 21.5 level again. And I honestly expect we will, whatever news comes with it, whatever excuse the market has for it. I just think just price action wise, we're likely to come down first. And in my bit of time that I have gone on Twitter recently, I've seen a lot of posts about this, right? This was the previous bear market, right? This was where it was bottoming out. It had a first rally, and then it made this basically high, slightly higher high, and the RSI looked similar or whatever. But yeah, they were posting screenshots of this side by side to what's happening now, and I think it's absolutely ridiculous because these are nothing alike, right? In this case, right, we had our bear market lows, and we had all these these wick highs forming kind of a resistance level, or at least some form of resistance, some form of market structure, right? We break out of that massively. We get big higher high, and then this is on a daily time frame, right? And now if we go here, this is a much bigger pattern. We have not taken out all our things. We're actually kind of rejecting at our previous high here. So we haven't had that massive same kind of rally. And this is on a weekly time frame. It's even showing us fucking bearish divergence, right? Although this is kind of slightly more muted, as it is kind of a double top on RSI. Still works similar, just not as strong, if you will. Yeah, it's not like, so if you see that shit, just if someone's posting that, right, that's kind of, to me, a good reason to unfollow them, because that probably means they don't know what they're talking about. Because a pattern like that is not really like, they're at that point they're either engagement farming or they just genuinely don't know what's going on. Yeah, so again, below I expect this to come down further with the momentum we have now. I would be looking for this to sweep these lows 21.5, and like, unless it by some miracle it holds around 21.5, I would expect this to trade down, and then we got a little target at 20,400, and my main target is that 19,000 area again. And I would definitely be interested. And basically, it's anywhere from 18.4 to like 19 2, something like, it's kind of a bigger area, but overall, this is where I'll be looking to add a lot back into Bitcoin at the very least. I mean, I've been DCAing since we actually had this dump here. I think since Bitcoin first at 23,000, that was my first buy back in June. I've been buying basically this entire area here, taking profit in here. Didn't do anything there, but yeah. And I've taken some gains off the table here in these, around these highs, and I'll be looking to add that back and more on the pullbacks here. I will be watching very closely, right? Because I am talking about 19,000, and I do still expect that to be, but like, markets can change, so there's a chance I'll just be buying back in around 21.5 as well. I try to be very fluid and not be stuck in in a single mindset, if that makes sense, right? That's how most people miss this entire pump, right? Because it had to go down further. I like to just do what the market tells me and not be too worried about what I feel. I just do what the chart tells me each day, and it seems to work out pretty well. Yeah. Another thing I wanted to go over, I wanted to cover some support and resistance stuff, because I know we got a lot of different levels of traders here. I know we got some experienced people, but I know we got some people that are pretty new to this too. So I wanted to just cover some basics and maybe some tricks for people who have been doing this for a while. But basically, if I'm going to be drawing support on a chart like this, this is kind of a random shitcoin GMX, but there's some lines that I'll draw even on a chart like this, and there I'll be looking for that'll be relevant even on my lower time frames, right? And a very major one is, we just had, we're in beginning of March, we just had the monthly close. So what I'll do is I'll basically place, with my magnet, I'll place a line right on where the monthly opened, and I'll add a little text to that, and I can say monthly open. And now when I zoom in on a weekly, there won't be really much here on this chart, but as I zoom in, we can start seeing how the monthly open, right? This is where it opened, right, on this candle. So you can see where that bounced, but it kind of makes sense from a even historic standpoint. And actually, when we look at just this single line, we're already seeing, we've got these previous highs. We came up above them, fell below, and now we're retesting at the bottom side of those again. So if you see weakness in a place like this, right, you're retesting the bottom side of that monthly open. You see weakness here, you can look for shorts, and you've essentially got all these little levels on the way down. So you've got obviously these lows, and you've got a wick open here, and you've got plenty of candles you can pull from, but generally this is kind of the interesting thing with support is I can draw all these lines, right? But usually, because everyone draws their lines differently, you'll most often actually see me drawing lines, rather than lines, see me drawing rectangles, right? I'll draw big boxes on areas like this because there's loads of these little lines in there, and you can use these lines still for more specific numbers. But when I'm looking for bounces in general areas, right, I've got all these lines that kind of just make up the same area. And depending on what time frame I'm on, right, on a daily, I've got a big consolidation candle here. This actually comes exactly to that high, to those high closes here in December. It's the body of these candles. It's the bounce here, the retest after the pump, right? So this is a very this tells me it's a very relevant level to be looking for it to trade back down to. So when you're seeing a big, you first see a big move above these highs, right? Because you first establish this as a resistance here when you close those dailies there. Then you get price that moves into it. It finds a bit of resistance, but it ends up breaking through it. And now you're looking for this. It comes down and it holds that as support. So now what was previously resistance, right, now becomes support. And this is a very interesting place, again, to look for longs, because you've essentially flipped the direction of the market, right? And then you can see this actually just makes a higher high, and now it actually is coming down again. And now we got a monthly close that we're retesting off. Of course, you look for weakness on lower time frames, but all in all, I would be looking for a lot of the times for action like this to just, if the overall market's bearish, to just trade back down to that same level again. And then what do you get? You get a big head and shoulders forming or whatever, right? And you can see these patterns before they even really show up on the chart, right? But you get these big levels, they all line up in the same area. You get a break, a flip, and you play the retest, right? So if I zoom in a bit here, we can actually see, so this was that monthly open, and these levels aren't perfect, right, because this is based on monthly time frame, but you can see that like the price essentially held this as support for a while, ended up closing the month there, then violently broke through, and then formed a little mini head and shoulders. If we take our little target from there or whatever, you can see that I kind of played out exactly back to the monthly open, where it's now finding a bit of resistance, right? And this is where you can look for action to take it further down, right? Because this head and shoulders that we had here, that's already played out, right? This little move to the upside, that's already played out. So I'd be looking for this to trade further down. And what's your invalidation for this? Well, you've got a little consolidation candle here, and you've got these highs, right? So you can very easily just say, if you get, say, a close above those highs, right, this would be a very obvious invalidation to your further downside, because at that point, right, we flipped above that monthly open resistance, or previous support, now resistance again. And that also again lines up with just these previous highs here from February, where we held a support, right? So it's kind of looking for confluence in areas where price was traded a lot, and you look for basically either for it to hold, and you look for, say, longs on support or shorts on resistance, because support and resistance often more often hold than not, right, when you get these relevant levels. Or you look for these breaks and these retests, right? And even if you are wrong, right, say you were to get into a short around here, right, well, your invalidation's above that wick, but you're targeting back down to these lows, and then to the big support level, and we can target any one of these lines that we want here, whatever floats your boat, right? But that's a great risk to reward. I mean, this is I'd usually take my first target right around like a conservative on those wicks, and then if I actually zoom in enough, I'll find actually more lines here as well, like all these little candles here can form. So this one would be relevant, right? These can form. The more you zoom in, the more, I guess, what do you call it? The more lines you'll find, right? The more support and resistance, and these will be where the price trades between, right? If I'm on a weekly, I'm not going to care about a line like that, right? So you can actually go in your settings as well. If you go in the settings of these lines, you can actually say visibility, and it won't show on a weekly or a monthly, and you can keep these on your chart. You can mark them however you want. You can say text, define them, right? I would honestly color code them as well if you're going to do this. So like this line I just drew, it's it's kind of there on a daily, but mostly it's just a 4-hour level, right? So I might say this is a blue line for me, and if I could mark it like this, but I would actually just do that, make this blue, and I can call it 4-hour level, right? And now when I come back to this chart at some point in the future, I'll have this level, and I can see if it's still relevant. One big thing to keep in mind, right, is to always look at your support from right to left, right? So note how I started with these levels here, and then actually connected it to that high. So I can find the confluence in the past, but drawing levels from I can't really do that on this chart because it's so new, but basically if you draw a level from a long time ago that was great back then, but price just kind of ignores it now, then it's just look for a new level, because having a support like an old support level is great and all, but it needs to actually respect it. So I would look for like let's see, do I have any obvious ones here? Yeah, it's not really gonna work. But basically, if you say have a big level, if you have a big line or whatever at these highs in the future, and price just starts trading like this through it, like then it just never really cares. Then it's time to find a new line, if that makes sense. So yeah, I just see how price reacts at a line now. That's why I like the recent monthly open, right? Because it just happened for us now, like a week ago, but generally the current monthly open is always an interesting level for price, and you can already see how it reacts there, trading back, like essentially trading back up to test it again, and now it's essentially coming to a decision whether it's gonna hold and break that. So if I were to pull my pigeon fibs or whatever, right? If I were to get basically my 382 but inverted, so I would be looking for it to either hold and bounce here, and then you get a move back up, and you essentially treat this as a fake out on the higher time frames, or you do get that lower high, you get you fall below that 618, and at that point you're looking back to these lows, and I would say likely to the real big support level we have here, basically at 61 to 58 ish. Yeah, I can keep essentially zooming in on these charts, right? So I'll have my 4-hour levels, but I can also have 15-minute levels that I could draw a line right there. So this is a 15-minute level, because you could kind of see how price trades around it on a 15-minute, and this might still be relevant on like an hourly, but once I really start going up to a 4-hour, price doesn't really care too much, right? It ends up just kind of forming that box. You can kind of see it for the center candles, but at this point, I would be looking for, I might draw a little box, but generally when you get these really lower time frame, you might get some slightly more accurate lines, but also you'll just get caught up in too much in the micro moves, and you might like essentially just confuse yourself, if that makes sense. Like if I were to see a line here and it just doesn't immediately move on a 4 hour, like it realistically does not care about that orange line on a 4 hour, right? It'll just bust through it if it wants to, and you will have, of course, these candles where it does hold above it, right? But this blue line was just as relevant, if not more, in terms of our actual, support or resistance, right? So that's just something to keep in mind: is don't draw too many low time frame lines, and that I would just say, if you do draw them, just keep them off your higher time frame charts, right? So you could set this to a max of like 2 hours. So now if I go on a 1 hour, I can see this. If I go on a 15-minute, I can see this. If I go on a 2 hour, I can see it. But once I go 3 hour, 4 hour, it disappears. Of course, you can use them, but generally I would say just keep the relevant lines for your time frame. Don't get too caught up in the low time frame moves when you're trading these higher ones. And let me grab another chart and we can do something similar here. Let me actually, because the market's been pretty dead, so I thought I'll just go over that real quick too. If the market's been moving like it has the last few days, right? I mean, I personally didn't trade too much here, but yeah, when the entire market is basically doing this, right? There's generally not much trading, but you can still find coins for that. So I'll make a little extra list here on TradingView. You can make an extra watch list, and I'll just have random shit coins that were moving at the time, right? So even with the market being super choppy, right, coins like Maker were still kind of moving. I mean, they were also choppy, but like it is still making moves, right? So these are 12% unleveraged runs, so you can take trades on this easy enough, right? Whereas if you're on Bitcoin, I mean, you're still getting chopped around on this chart, but on Bitcoin, fucking wick low to wick high, you're getting 2%. Realistically, a few hours you're trading 0.5% when you're paying 0.12% on fees for a position. You're getting 5 times your fees if you caught the perfect like center move or whatever. So I generally look for shitcoins when things aren't moving, because shitcoins can trade opposite to Bitcoin or trade completely decoupled, right? They can just be doing their own thing while Bitcoin chops around. As I said, I mean, this was also chopping around, but it still made good moves. So I caught a little trade here yesterday. Saw it coming down, just sweep those highs, saw it coming down, held in my pocket, got in a long around here, and I saw, usually I will target the highs and the 1272, but in this case, I saw kind of obvious resistance there with those closes. So I actually took a lot of my gains, usually that I would take at this level, at that 1 fib. I basically just moved that profit target down, got out here, and then, I mean, market dumped, but still made a few shekels. Yeah, generally I find these coins by just going on, say, Bybit, and I'll just go to say in the top here, I'll just say USDT perpetual, and I'll just sort by what is moving, and I'll just look for ones with some volume. So Mask here, for example, is has a lot of volume. It's up 5% today, which for shitcoin 5% isn't much, but overall, we're seeing this moving, and I mean on higher time frames, still choppy as chart, but I can just pull some lines, support, resistance, kind of a median line here, which we're at right now. So we've basically got a big trading range, and then I'll look on my lower time. I do want these. I don't know why they just disappear. That's annoying. Damn Bybit. But yeah, and I'll just usually grab the ticker on my trading view. I'll say mask USDTP. Always make sure that you're using the trading view chart of the exchange you're trading on for shitcoins, right? It doesn't matter too much for Bitcoin, but if you're on small cap coins, right, you can actually see relatively big price gaps or just levels that are different, right? So if you're looking for very specific TPs on a scalp, you want to make sure that you're on the right chart, because otherwise, if I were to say compare this, so we're looking at this wick high here is 4379 on Bybit. If I were to pull this on, say, Binance Spot, it's actually 4333 basically. So a 433, right? So it's different levels. They're not really the exact same. So I would always look to use the chart for the exchange I'm trading on, right? Yeah, again, I've got my levels here. Just turn the magnet on. Great. So I've got some support and resistance lines. I can actually see it holding around that medium band. Might pull some fibs or whatever, right? Might see where it's at. Again, 0.5 fib, median of the fib. Yeah, so I'll just look through these coins, look for specific setups, and I'll essentially just look for anything that isn't moving like Bitcoin. Because when something isn't moving like Bitcoin, it's likely that it isn't going to move like Bitcoin for a while, and you can catch trades on those regardless of what Bitcoin is doing, rather than, a lot of coins will just trade exactly like Bitcoin on these dead days, right? So, I mean, this was the last few days on Bitcoin. This was on Atom. Atom already broke down a bit, but they're all kind of just very similar charts, right? And some will move a bit more than others, right? But your dot is basically the exact same thing, right? So ETH especially too, right? So they just trade the exact same. So going for shit coins gives you that, gives you those things to watch for. There was ETHW was another shitcoin that I was trying to trade. Here again, you can just see a very obvious place. I should probably update that, but yeah. So we had a bit of a retest here, right? You come up, you break through, you come up into it. Say you got in here, you got your stop loss above those highs. So at this point, right, you'd be in a short here on that second high. I mean, if you zoom in enough, you could probably see that there's likely some. God damn it, where is this? If I zoom in enough, never mind. There was not. But yeah, looking for this at this retest, slightly higher high, but you're not stopped out. Get a big wick down straight into that previous support level. Comes back up. Now this is not natural price action, right? This is probably a whale playing games, so someone with too much money manipulating price, but yeah, or someone got liquidated, right? That's also very possible, right? So if someone gets liquidated, then a lot of the times they can just nuke price, but this usually happens when there's a very thin order book. So if I were to look at ETHW, right? So that's why I do look for volume. So this has $2 million traded in 24 hours. That's really not a lot, right? For reference, Bitcoin does 3.2 billion in 24 hours on Bybit, and most of the like relevant coins, you'll see they'll have like decent few million. 2 mil is not really, it's not really a lot. So you'll see here as well, this is the order book. So this is where you can basically see anytime you place a limit order, anytime you place an order that doesn't immediately get filled, it will show up in this order book. So everyone who isn't filling on market or who doesn't have an open, or who's trying to fill a position, basically it will show up in the order book. And you can see here that the order book, this is like, these orders are very small, right? And I mean, we can zoom out a little bit, but to move the price of this coin, say from 3.9 to 3.4, so 0.3%, we're talking about like $10,000, right? That's really not a lot when we're talking with leverage, right? Versus something like Bitcoin, if you wanted to move the price for Bitcoin 0.3%, we're talking, let's just say 0.4 to, I mean, we're talking a couple, like 100, we're talking about like millions, it's really quite a different game, if you will. But yeah, when you get these really thin order books, right? So when you do have big players, because you do get like bigger players on these coins still. Sometimes they just they market fill an order or they get liquidated, right? And that basically means that the system will fill their entire position, try to fill their entire position with orders from the other order book, right? Because every position in leverage trading, right, or in trading, every position has someone on the other side. So if I want to long, someone needs to take an equal amount short, right? Basically, if I want to buy coins, someone needs to be there to sell them to me. So when a very big player is trying to buy, they'll often have limit orders, say above these highs or where have you. They'll have limit orders in very specific places where people are likely to get liquidated or where price is likely to trade down into, and they wait for price to come to them. Kind of different topic here, but they got very big positions because they got a lot of money. But when they get liquidated or they accidentally market close or they hit a stop loss or whatever, right? All those things will fill them at market, which just means that the system is going to try to fill them with whatever liquidity it can find. And this is basically if someone is is trying to close a long, they have to fill a whole bunch of sell orders someone's trying to close a long, they have to fill a whole bunch of buy orders because they're trying to sell their tokens, right? And vice versa for shorts. So sometimes when you get very thin order books and very big players, these things happen where you get a single wick that the wick itself here is 1.7%. To the top back, it's 2.3. I mean, this isn't that crazy for a shitcoin, but overall, like, this is a very big wick, and usually happens when there's little liquidity in the order book. So there's not a lot of value in the amount of orders placed, and you get bigger players trying to quickly close positions. You'll get these big wicks and they'll often get eaten up. So it's basically price trades down and they'll just get eaten up by people buying because they realize it's, the value is higher realistically. Yeah, you can see even these wicks will come to support levels, right? So essentially, this just leads into what I was talking about before, in that it's just where people are interested in buying, right? So we had a big resistance here for a little while before we broke up and out of that. But then, as I went over with the VPVR a while ago, and for the we've got a big volume gap here. No one's really interested in trading between these two levels, right? So we got support here from these lows. We got resistance here from these highs. Now it broke a resistance here. So this now becomes a support level because we broke it, right? And now people would be interested in buying here, especially when you get these very strong moves like that. So you can actually see the wick ends up stopping kind of around that support level. So it's just where there's buying interest. Yeah. And now we actually saw trading back down, fell below, and now it's actually it's retested that again. So this is actually back below that original resistance line, and it retested that and headed back down. So it broke it. It basically broke support, retested, came down, broke support, retested, came down, and now we have kind of a median support line here. So not quite the lows, but it's kind of an area where there's some interest. So you might see a little bounce here again. I do just think this is going to range here for a bit more, but we again got another support level here. Usually when you got these very big wicks, they can be targets, but I don't really care for them to care to draw them for support. So like, I would not be looking for support at a single wick like this when it's, you know, more than the size of the actual candle. So I would be looking for more relevant reasons to consider support. So I would usually just look for where it's actually trading now or where it was trading in the past. In this case, I mean, this wick did come basically to the highs here of this general of this previous breakout here in December. But all in all, I would usually be looking for either that or, you know, the highs there, right? So you've got different levels here again, and these form like areas. So you could very easily say this is a box. Oh, by the way, these I've been drawing these lines like this. You can very easily grab a trend line, because I didn't know this for a while, so I'll tell you. You could grab a trend line, turn on your magnet. You can just click it at the bottom of a wick, and then if you hold Shift, it'll go to a straight line out in a direction, right? So you can snap it essentially. Whereas if you just hold it normally, you know it's gonna be a little messy. So yeah, this is how you can get trend lines to go in straight lines, which is very nice. Yeah, you'll just see as you if you trade more and more, it's just market moves in steps, right? My friend put it, the market moves like a drunk person walks. You know, it just goes, you know, it's never in a straight line. And when you do get these straight line moves, right? When you do get these very aggressive moves, they come back very aggressively as well, right? So you got to essentially anywhere that price doesn't chop through, it usually comes back, right? So you'll see here as well, you know, you get a big straight line up, and then you immediately wipe out basically the half of that move, if not actually more, in a dump after that, right? So this is something that applies to all time frames. It's something to always keep in mind. It's the same thing on when you look on Bitcoin on these high time frames, right? It's literally how these cycles work, right? You get a massive straight run up, and then you cut in half. You basically cut the move in half again, and I mean this minus 80%, so a bit more than in half. But in general, you know, just this makes a bit more sense if I get it off the log scale. Looks a bit more relevant, right? So you get a big straight line up and a big straight line down. So if you see price action that is actually moving like this, right, rather than going in a straight line, that's better than if things go in a straight line. So a lot of people will get chopped, like get scared out of their positions or whatever when price is pulling back against them. But usually, that's actually a good thing if you're looking for further continuation, right? What you don't want to see though is, you'll get this, you'll get that those pullbacks, right? But what you don't want to see is you get these big pullbacks and then it barely makes a higher high, right? You're just barely taking that out. For real, like if you want to know if you're really in a strong trend and you're likely to continue, you want to see basically a strong impulsive move up. You get a retracement, you get a move up, and then you basically hold that previous high. And this is like, I mean, of course, perfect, but perfect price action. You're never going to see it like this, or maybe at some point you will, but generally, this is like the classic way where you just hold that previous high as support. That's like the strongest trending move up. But what you also a different way would be usually when you do get these big moves is you want to see you want to basically see that you get sideways and down action, right? So you're essentially making what we'd call a bull flag in an uptrend, inverse for a downtrend, right? And it's basically what we've got here over and over again on different time frames, right? You get a big dump, you trade a bit sideways and up, you dump again. I mean, this was mostly to the side, but if we zoom out a bit, we'll see actually that this entire dump, right, on a weekly it was basically a straight line, and then you get sideways and up, which again, this is a bear flag, and that just continues back down, right? Here it's the opposite, right? Rather than getting a bear flag, we're actually trading sideways and down, and at that point you get falling wedges, falling beaches, whatever you want to call them, and those are often bottoming patterns, which again, if we check, is just price making slightly lower lows, right? So if we invert this, it's basically what I was saying is bad, that we're doing now. If you're making these slightly lower lows, but you keep getting pullbacks, there's generally weakness in the move. The trend is often coming to an end. And of course, this is probabilities, right? So it's never guaranteed that this is going to go back up from there, but we play probabilities, and when they're in our favor, it's nice, So in this case, I wouldn't be bearish coming into this, right? I do remember trading it during this time, and everyone was sure it was coming to 20,000, and this is why I recommend people just stay off Twitter or social media for crypto or for trading in general. It's because there's too much noise, too many people influencing or trying to influence your opinion, when in reality the chart will tell you everything you need to know, right? Here you get big move up, and then all of a sudden you're getting slightly higher highs with strong pullbacks, and now you got a lower high, right? At this point, right, you got lower low, topping out here again. This is like a get the fuck out signal before the 50% down, right? And this, like, if you were on Twitter at the time, everyone was calling for fucking 75K, 80,000, 100,000, right? Because it was going to keep
Can
going
I
up
ask a
forever.
question?
Yeah, of course.
I have just one question about the bull flag and bear flag.
Mhm.
At which time frame do you use them? Do they work on any time frame, like on the
Anytime.
1 minute?
Yeah, so I would not, I don't recommend people trade the 1 minute, but theoretically, yes. So, I mean, you saw me pull it on a daily and then here on a weekly, right? So this is on a weekly. We had one on a daily. This was another one, right? Big dump, sideways and up. That's why I was taking profit here, right? And you continue down. This one didn't go quite as aggressive down, but yeah, these work. If I zoom in, maybe I can find some on the lower time frames. But yeah, these should work on essentially any time frame, right?
Okay. Thanks, man.
Yeah. Yeah. Of course, you can't find any when you need to find them. I mean, we can just kind of say this is one, right? This is essentially a dump and then a wedge. So this isn't really sideways and up. When you get these wedges, it can kind of go either way. And then you just play whichever side breaks. But yeah.
Isn't the other one that the lower one is look like a beer flag?
Yeah, so, I mean, it's kind of, you can't really draw a trend line on it. So this is more what I would just usually call a retest, right? You get these lows. Oh, you get these lows essentially established all throughout here. You finally break through them. You quick pump back up, and now you're topping out against it, right? You're just struggling to break it. You get a few wicks. This is kind of your,
Like,
yeah, it's going to go down signal. When
yeah,
you
like a
see,
resistance area.
yeah, so it's resistance from like basically previous support. When it breaks below, becomes resistance. And now you see as it comes up to it, right? Slightly higher high, pulls back, slightly higher high, and then you get that. This candle basically tells me that's going to dump, right? Because you get this, it gets this big
Yeah, the
euphoric pump.
deviation.
Yeah, so it's essentially uh, the people who entered short early, right? They'll have their stop losses there or there. The people who want to long the breakout again, there's a lot of retail traders, and there's something to know. Most all of retail loses money trading, right? They'll be really quick to want to long the breakout here, and that, you know what that does? That gives. We talked about the order book and liquidity earlier. Big players will look for levels like this, right? They'll run up the price a little bit, and then they'll basically enter all their limit shorts here, right? They'll essentially put an order here, and all these people who had stop losses for shorts or early longers will basically be filling their orders in this area, and then it actually dumps because there's no actual buying pressure behind it. So now you could try to play the opposite end here with the whales, but usually I would just look. Okay, I see a big wick right above my resistance, but it closed below, and then had a big bearish engulfing candle. That's kind of, you know, this is probably going to dump a signal for me when I am looking. Oh, goddamn! When I am looking at this from like a retest perspective, right? That's a great entry signal. When you're looking at this here, big resistance, big support becomes resistance, retests it. You get a big liquidity grab wick with a bearish engulfing candle. Oh my god. With a bearish engulfing candle, that would be a pretty solid entry signal for a retest. And then, this candle is just kind of the cherry on top. So sometimes you'll get these extra candles like right after where it'll just you can essentially fill your orders a bit higher again. So at this point, right, rather than getting, you could get in at the bottom there. Now at this point, stop loss above that wick. You're targeting back down to these lows. I would usually target the slightly, I'm conservative, so I'll target the slightly higher wick in this case. And then way further down, you can get your fibs or other support levels or whatever to find these further targets. But yeah, rather than getting, say, this if we're targeting that wick, rather than getting this 1.83, we can get in higher. So at this point, our stop loss is lower, our target is further, and now we have a basically 3 risk reward instead of 2, but getting a slightly better entry there. This is something you'll get, like, I guess, better at with time. yeah, these are like the extra spice candles, essentially giving you a bit of extra shekels if you catch them. Or you can just use them as further confirmation, right? You just had a big liquidity grab above here, closed below your resistance anyway, and then had another test and another close, basically rejecting that same thing as resistance again. So yeah, at that point, that's a lot of, I guess, confluence for me if I'm looking to enter that as a short. Yeah. And here's another like great example of not getting too excited. You get a dump and you get sideways and down. So yes, there was of course some shorting opportunity there, but all in all, it didn't really trade much down from there. So when you do see these slightly lower lows or on the top side slightly higher highs, right? That's always the time to be cautious. That's not the time to be aggressive. And what I just showed with that, with the what do you call it? With the liquidity grab candle, right? Big wick above, but it actually closed below. That's similar to what actually happened if we're looking at a weekly time frame on Bitcoin, right? It's what we call a swing failure pattern. And in this case, we set a high here a while ago. So April, we got a wick high. And then coming up here, October, November, we actually had an initial wick there, close below. I wouldn't be too quick to enter on that, just that, but yeah, you then see a wick above, just barely closing above it, but then actually the next candle is just massive bearish engulfing. So you could see this again. People are seeing it breaking all-time highs, quote unquote, right? So retail gets even more aggressive. Now, granted, this is the bull market, so retail's already peak euphoric, and they've been bidding this entire thing up. Right? Yeah, you get a liquidity grab there, and then you get bearish engulfing close, right? And this basically just means that your candle, this single candle here, basically took out all of this price action here, right? It closed below all of these lows, below some of the wicks, not all of the wicks, but yeah, you take out that wick on the bottom there too. Yeah, generally, that's what we call a swing failure pattern, and it's like, when you get this at the top, right? Great warning signal. Granted, usually peaks of bull markets aren't really the risk-off environment. But yeah, it's definitely good to if you see that kind of stuff, to consider taking some profit, right? Like you don't want to be missing out on the move or whatever, and I get that at the time, but delete this. Yeah, so I get that, but realistically, that's kind of a warning signal to maybe take some profit, right? And then especially when you see, this was basically when I got out, right? So we had a high, higher low, high, higher low, high, right? This is kind of a lower high, but it was still continuation within the smaller trend. But yeah, then we got a higher high, but then we actually came down, and now we just made a high. We took out our previous low, right? And this is how reversals start, right? So that's like your first warning signal, and then at this point, we're trading sideways and up, big bear flag on the weekly. So this was the area where I basically got out of crypto. So I have not had Bitcoin since basically 40,000 broke. Since we broke down from there. And this is on a weekly time frame, so it's not like you had no time to react to this, right? So it's just all about not letting your emotions cloud your judgment or your greed or whatever, right? It's about just trying to be subjective with what the chart is telling you. And what you can see is you made a massive high, right? You had a massive rally, 50% pullback, sideways and down. So then you don't need to be overly bearish after it's already down 50% and then it's going sideways and down, right? You just have you just set some levels. You see that it breaks bullish engulfing here, or it takes out that previous candle. kind of just get back in signal. It's still the bull market, right? You get a rally pullback. This is just a healthy pullback, right? This didn't even break pigeon pocket, held perfectly in it actually. If I were to actually pull this fib right, it's just a 3A2, by the way. Yeah, it just continues. But then once you see that lower high come in, or lower low, sorry, at that point it's like, okay, let's see what happens here. Let's not get caught up in the excitement. Yeah, now we've got kind of the inverse, right? So this is what I wanted to talk about, right? Because so we do have, these are kind of minor lows, but we do have some form of higher high, or minor highs, sorry. So these are minor highs. So we do have some form of higher high in the market right now, which is why, even though I expect us to come down right now, I am looking for us to hold around that 19,000, which would make this kind of a weird head and shoulders or whatever. But more importantly, we'd have a confirmed higher low and a higher high. So at that point, new trend, right? No longer a downtrend. Doesn't immediately mean bull market, full disclosure, right? We don't immediately go from bear market to bull market. So if I were to pull this chart, right? It's a little messy, but like the previous cycles, right? We before we really made really higher highs. It's always quite some time before we get there, right? And this is usually like after the halving, so like we don't really get going until after the halving. So if I pull this shit off my chart, damn it. If I hide drawings, there we go. So we had a halving here in 2016. It kind of got going before then, right? It just barely made a macro higher high here, taking out that previous high from the 2014 cycle, 2013 cycle, whatever. But here as well, we didn't really get going. Like we did have a rally here. Don't get me wrong, big rally, but there was a lot of chop, and then the bull market didn't start until a while after the actual halving. And the halving, for those that don't know, basically every roughly 4 years, the amount of Bitcoin block rewards, so the amount of Bitcoin that Bitcoin miners gets cut in half. And that's historically led to the start of a new bull run, basically. Yeah. Does anyone have any questions? No? Okay. I covered what I wanted to cover, I'm pretty sure. Oh yeah, one thing, if it'll load. It does not. Fantastic. Let's try that again. There we go. One last thing. Dixie, right? Dollar index is looking to be breaking the highs here, or the resistance here, which again further gives me faith in the fact that that Bitcoin is more likely to continue to trade down here. So over this on a weekly chart, so I would expect the next few weeks, maybe next month, in a month or so, I would be expecting we trade around 108, which could coincide nicely with Bitcoin coming down 20,000, 19,000 area. Because generally Bitcoin trades against the dollar, right? So when the dollar goes up, Bitcoin and risk assets usually go down. This doesn't always happen, so I generally just look at it on a weekly time frame for general trend, rather than looking at it on low time frames, as you'll get chopped out. And it doesn't have to be so. It like the Dixie doesn't always trade against Bitcoin, but it is generally pretty decent, right? So when you do start seeing Dixie pulling back, we got a rally, but you do get sometimes, where they coincide, where you have periods that both Dixie and the Bitcoin can go up, because these are not directly inverted, right? So the Dixie is the dollar versus the euro, the franc, the pound, and some other currencies, Japanese yen, and I think one more, two more, something like that. But generally, it's just when those go, when dollar goes up against other currencies, that's when, that's when this chart goes up. So it's not directly related to Bitcoin or other assets, but usually when people want to be in dollars, like the value of assets goes down. Yeah, again, I do think this trades up to 108. That's kind of our next resistance level, as we established. You can draw a line, basically that high close. We got the wick there. I could zoom in a bit more, find some more specific levels, right? I could say wick high there. I could say we got this very obvious line, right? So this is a lot of tests. We're starting to break this, and I would look for this to trade back up into that 108 area, and this is, 109, so it's slightly higher. But again, this is kind of finding those areas, right? It's anywhere between 107 and 109 that I can mark off there, depending on how I want to draw it. And then if we were to pull a fib, yeah, so 109 would be like our 618 fib retracement, which would be a very alright place to find a lower high if trend decides to reverse here, or or if it just continues, right? In this case, we actually we never broke support, so we have previous highs from 2016 and 2020. It basically held that as support, but yeah, overall, I think for now, I'm not going to call for a new high on the Dixie, but yeah, 108 is pretty likely, in my opinion, if it closes like this, right? This can always just nuke back down, but the way it's looking now, I would call for 108, like 108, 109-ish next month.